A stellar week in the markets. And I want to talk a little bit about Online Trading Academy. They've been around for over 24 years, teaching people just like you how to use the market for income potential. We're located here right in Bloomington next to the Mall of America. Now, that could be potentially used during your working years or during those retirement years. And Al, it's Saturday. Can we do a quick stock market update?
Let's do a quick one.
Let's do that. So, Al, we had a great week. Obviously, the markets were phenomenal. Stellar week. S&P 500 up about 1.6%. The Dow Jones, not quite all-time highs, but still up about 1%. The NASDAQ, I swear, that is screaming gains.
Yeah, that's really lifting this market.
It really is. That technology. All-time highs, once again, 2.6 up on the week. Now, OPEC has been met this week. And OPEC is the Organization of Petroleum Exporting Countries. They're talking about how much oil they're going to be producing, right? Stellar week for oil, once again, ending the week at about 75 bucks per barrel. The U.S. dollar was still up, but it had a retracement towards the latter part of the week. Now, cryptocurrencies, that's always been a hot topic. It's not so hot the last about month or so. It's been stuck between that range of 30,000 and 40,000 for Bitcoin. Same thing with Ethereum. That actually had a positive week, but still stuck between that roughly that 2,700 bucks down to 1,700 bucks per Ethereum. So we had some great moves in this market. Some were up, some were stellar. But still, average investors want to get involved in these markets, but they want to do that with consistency. What do you do here at Online Trading Academy to help them do that?
Yeah, well, no. First of all, you mentioned several different things there, and people are pretty much just familiar with mutual funds or stocks. You mentioned oil, you mentioned cryptocurrencies, you mentioned the dollar. Understand that these are all things that you can invest in. You can participate in the movements, whether they're going up or down. But here's the key thing, the most important thing. The only way to make consistently smart investment decisions is if you know, if you learn what works, what doesn't work, and why. Those are key. And, we have a lot of people that come in, Josh, and say, I went to 3 or 4 different financial advisors for advice, and I get different advice from each one. I don't know what to do. And that's why it's so important to learn the factual fundamentals of investing. And what we start out with for our students to help them is what I'm going to call the fundamental pillars of investing.
Okay.
And number one is to stack the odds in your favor. It's just like a casino. It's very simple. I think most people that go to a casino understand that when they leave the casino, they're going to leave with less money than they came in with. And that's because they have the odds in their favor. And casinos know that over time, because of those odds, the rules that they have set in place, that they're going to do well. So the second pillar is setting and following rules that really stack those odds in your favor. And then this is important, having the discipline to follow the rules. But you need to know first that those rules work. And at Online Trading Academy, we make a big effort to get feedback from our students. And in one of the recent surveys, the students said that sticking to rules was the number one critical factor for why they were or were not achieving their financial goals. So that's really important. The rules, and this is the great thing, it really simplifies things. There are so many different opinions out there, so many different ways that people can approach the markets. You can go to Barnes and Noble or the library. You can spend the rest of your life reading books on different strategies. But the important thing is to try to simplify this, use something that works and has been shown to work on a consistent basis, but then have a set of rules you follow, just a step-by-step process for everything that you do, no matter what you're trading, no matter what your style is. That's that same strategy that is going to have you stacking the odds in your favor.
You're right. I mean, what's great about in you and Online Trading Academy is they have a proprietary strategy that's designed to teach you to make better investing decisions. And the fact of the matter is, right now, people are getting into the markets at a record pace right now. That's what the stats are. But they're doing that without the knowledge, but the proper tools to make proper investing decisions. And you help people with those odds, those 3 pillars, having the odds, stacking those odds in your favor, having rules within that plan, proper tools with it as well, but then just sticking to it, which is discipline. And Al, you teach investing classes right here in Bloomington that we do every single week. We do some during the week. We also have these on the weekend. They're only 2 hours and they're free, and helping people to hopefully make better investing decisions. So it's the beginning of the show. Now I want to give away 20 tickets for callers 1 through 10. 20 tickets because you're going to get one for you and one for a friend. Call 952 952-814-4410. In this class, we're going to talk about how to manage risk, navigate these volatile markets, but also how to time the market by letting price come to you. 952-814-4410. You can also text. I'm going to make it real easy for you. Text the word invest to the number 484848, and we'll get back to you right when you do that. Al, what do you got coming up next?
Well, let's talk about why there's a gap between your expectations and your reality, and that might be where you have your money invested.
That's the problem is people have their money sometimes in the wrong places. So we're going to talk about how to place potentially your money in the right place. Once again, for 2 tickets, 952-814-4410, or text the word invest to 484848. This is Josh and Al, investing with confidence. We will be right back. If you have questions during the live stream here, feel free to ask questions, and we'll try to answer them on the breaks here. Did you hear that? What's great about these holiday weekends is we dress up to do the show.
we dress comfortably. This is the real us.
Mm-hmm. When we're gonna hear Miller Marine.
Miller Marine. There, you just heard it.
There you go. Can't go a Saturday without that. What's going on with the crypto? Well, it looks like Wes has a question about crypto. Well, there's a lot going on. There's basically nothing actually, Wes. It's stuck between that 30 to 40,000 range as far as Bitcoin. We've got about 30 seconds left here, but really, it's just like anything else. Once they go parabolic, they seem to have a retracement, and that's what happened. Now it's been consolidating for about four weeks roughly. Let me pull up Bitcoin here. About 4 weeks, but we're going back live here. We'll catch that on the next segment. Welcome back to Investing with Confidence. I am your host, Joshua David. Having a great time on this holiday, 4th of July weekend, talking about the financial markets, how they work, and how you, as average listeners, can hopefully make better investing decisions. If you happen to miss 2 tickets for the investing class, call 952-814-4410 or text the word INVEST to the number 484848. If you're just tuning in, Al was shedding some light on 3 pillars of investing: stacking odds in your favor, having rules, strict rules, and then following those rules, which is in a plan. So basically having the discipline to follow those rules. And now into this next segment here, you want to talk about why there's a financial gap between your expectations and the reality of where you are. Mm-hmm. There's a gap there. And people understand and know that, but they're not sure why. So let's talk a little bit about why there's a gap between your financial expectations, but how do we close that gap by potentially using the market?
Yeah, well, they're probably not following those 3 pillars that I mentioned before. And the hardest of the 3 that I talked about is the discipline. It's the discipline to follow the rules that are set. But we help you with the odds. We show you how to identify what the odds are that can put the potential in your favor. In other words, stacking the odds in your favor. We help you develop the rules to follow those. Now it's up to you to provide the discipline, but that comes with practicing something that you see that does work on a consistent basis.
But practicing right as well.
Well, that's correct. I mean, you can practice the wrong things, and then you end up with the behavior that is not good.
Yeah.
So it's practicing the right things, and the way you do that is to practice it under the guidance of somebody who knows how to do this and has had the experience with it.
I mean, you've helped a lot of people with that plan, just strict rules within that plan, and then just
Right.
helping with the emotional part of following that plan, making it easier to do that. And it's nice with Online Trading Academy that you've helped thousands of students over the course of your years here. So
Yeah, and you mentioned one thing that's important there, and that is with the plan, you really control emotions because you have to agree to the fact that if you are a human being, you have emotions that are going to get in the way. You control those by following a set of rules that you use for every trade you're going to do. But when we're talking about the fundamentals of investing and why it's so important to learn those, probably the most important fundamental is learning why price changes and then how to use that to time the market. And I know most of you listening have heard numerous times you can't time the market. But think about this for a minute. Who's telling you you can't time the market? It's the people that are timing the market that don't want you to know how to use it or do that because they need you as a client. And they need to have somebody on the opposite side of their trade that isn't as knowledgeable as they are.
explain that a little bit more because a lot of our listeners have been conditioned for their whole life
Sure.
to place their money or give their money to a trusted person. You see the commercials. Explain that a little bit more so our listeners understand they're being conditioned, but how do we do that ourselves?
Yeah, well, first of all, you do it by understanding what the fundamentals are, and the truth is that the people that are giving you advice actually have a conflict of interest. They have a responsibility to the company that they work for. They have a responsibility to their pocketbook. So the advice they're giving you may not always be in your best interest. It may be actually in their best interest. That's why it's so important for you to understand how the markets function. And I'm not just talking about the stock market. There are other markets that you can participate in that most of the advice you're given it doesn't include these. And those are leveraged assets like futures, Forex, and options. Those, and we'll talk about those in a minute. But again, the important thing is understanding that no matter what you trade, you all have pretty much the same goal. When you buy something, after you buy it, you want the price to go up because that provides a benefit for you. If you sell something, you want the price to go down. So isn't it important to be able to identify, if you could, when that's going to happen and actually before it's going to happen? That's timing. That's timing the change in price in individual assets or the markets. The core strategy that our students use, it's a foundational investment strategy, is designed to do just that. And fortunately for us, the people out there that are actually moving the price, and that's, again, part of understanding how the markets function, why price changes, we just follow what they're doing. They are telegraphing to us on a particular type of a chart, price chart, that we teach you how to read. They're telegraphing to us where their next trade is going to take place. That allows you to be positioned before they do it. Actually, then you let everybody else come in and provide a profit for you.
Yeah, that's key. I mean, you talked about the three pillars of investing in the first segment. And there's two more keys, like you said. There's why does price actually change? And then how do you time those entry points and exit points? It all comes down to one simple thing. It's the law of supply and demand. More buyers, we're looking for buyers if we want price to go up. We're looking for sellers if price wants to go down. And Al's talking about with the core strategy, it's identifying these areas, or we call them zones, where we want to get in our positions, but also where we want to get out. So you don't have to have the exact price. It's an approximate zone with proper risk management. And that comes down to understanding and learning the techniques and strategies of a core strategy, the proprietary strategy that Online Trading Academy has. So, Al, we have a lot of listeners that they need a strategy. And a core strategy just might be that thing. So you teach investing classes right here in Bloomington and talk about supply and demand, how that actually works, but how that applies to our core strategy to help you make better investing decisions. So callers 1 through 10, I want to invite you to an investing class. We have some coming up in the next couple of weeks here. And Al teaches these. They're only 2 hours. They're free. They're locally here in Bloomington. So callers 1 through 10, you're going to receive 2 tickets. You're also going to receive the Financial Quick Start Kit. When you call in right now, make sure to mention that That'll help you get started. Call 952-814-4410. That's 952-814-4410. You can also text the word invest to the number 484848. Al, you mentioned something. You mentioned other markets. Now, a lot of people are searching for income potential. The fact of the matter is Americans are starving for extra income right now, and they're searching for the markets. That could be an avenue for some people. And you mentioned those other markets, futures and Forex. Why are so many people coming to Online Trading Academy to understand what those markets are? Why might they want to utilize them, included with the stock market?
Okay, let me ask you this. You've been in a shoe store before?
Once in my day. You know, I do
Once
like
or
my
twice.
J's, my Jordans.
Okay, is there only one size?
There is, well, one size for me, but there is many, many sizes.
Yeah, but there's one size that's right for you,
Correct.
which would be a different size for me. I know you have, no offense, you have big feet.
I got a size 13. That's the fact of the matter.
You should never fall over. There's no excuse for you falling over with platforms that big.
I tell you what, I am a very good skier.
You don't need skis. You have,
You're right.
Yeah, you have a pair of Florsheim skis on right now.
Florsheim.
But anyways, the point I'm making there is that there isn't a one-size-fits-all investment strategy either, or investment plan. Everybody's a little bit different. And the ironic thing to me is that most advisors do exactly that. Even if you go in and you say, look, my concern is income. I need additional income now. Or you go in and you say, all I'm concerned about is protecting my retirement plans, building my retirement. And you would expect a different strategy for each of those, but most people are put in the same strategy regardless of what your goals are. That's not correct, and that's why that's one of the reasons there's that gap between what people's expectations or needs are and where they really are. And most people are only familiar with actually the smallest market that's out there, and that's the stock market.
Yep.
Stock market or mutual funds. Mutual funds are just combinations of things. But the real sad thing, Josh, is that almost half of the people out there don't have any idea where their money is, what it's invested in, especially if you have an employer-sponsored retirement plan.
Yep. So futures and Forex, why are so many people gravitating towards those and learning those?
Yeah. Again, that gets down to what's appropriate for you. If you need short-term income, if you need some additional income, and maybe you're behind on where you want to be, there are assets that really are ideal for that. Futures and Forex are two very short-term trading vehicles. Forex actually can be used short-term and long-term, and we show you how to approach that market for the different time periods. But futures is where you're looking at something where you think it's going to be worth in the future. Is it going to be worth more or less? And it can be the major stock markets, commodities, sugar, corn, your favorite,
lean hogs.
Oil, gold, you mentioned oil. Oil, yeah. That's a way to trade oil.
Yep.
Gold, silver, currencies, interest rates, a number of things. Futures trades almost 24 hours a day, just like Forex. The foreign exchange market trades 24 hours a day.
Think about that. People have the opportunity to trade in the evening.
Right. For people that say, I just don't have the time to do this, that really takes that excuse away from you.
You dictate when and where you do that.
You choose when you want to do it, and again, where you want to do it. Where you want to trade anything is up to you. As long as you have internet access, you can trade on your phone, you can trade a laptop, computer, anywhere you want to at any time of the day or night. It's what's appropriate for you. But if let's say you're behind on where you think you want to be, then you're probably going to need to do something or have access to a strategy or an asset that maybe can provide a better return, a higher rate of return. Futures, Forex have the opportunity to do that with smaller amounts of money because they have leverage. Leverage can be anywhere from 10 to 1 to 100 to 1 or more, which means every dollar that you have to invest in a margin account can control 10, 50, 100 times that amount. Allows you to have a smaller account and still participate in a higher value investment, which gives you the potential for a much higher rate of return.
Yeah, when Al's talking about a smaller amount of capital, that is much smaller than the stock market requires, because a stock market requires your capital. You need the buying power. Utilize the leverage properly, just like you do in your everyday life. People have a home, a mortgage, that is utilizing leverage. You can do the same type of concept in the stock market or the futures market or the Forex market. So Al, you talked about that shoe. You don't go into a shoe store and buy one shoe. I mean, they have several selections. They have many sizes. So you don't have a one-size-fit-all shoe. Same thing with investing and trading. You don't have a one size, one plan fits all trading and investing plan. But unfortunately, that's what most people are put into
Right.
is one type of plan. So having a plan that's strict for you, for your objective, that's going to be key for that income potential. And you teach investing classes right here in Bloomington to understand those techniques and concepts, utilizing these other markets, trading 24 hours a day, which means any time of day. You dictate when you trade and invest. So callers 1 through 10, I want to invite you to an investing class we do right here in Bloomington. Al teaches these. They're free. And the best part, they're only 2 hours. Call 952-814-4410, 952-814-4410. When you call in right now, mention the Financial Quick Start Kit. That'll help you get started. Al, what do you got coming up next?
Well, let's just talk a little bit about retirement. Why the Wall Street retirement recommendations many of you are following just might ensure the fact that your retirement savings run out of time before you do.
And that's talking about the 401ks and IRAs coming up next. 952-814-4410. We will be right back. That's a great comment there by Tibor Moody. It says, too much leverage equals more risk to blow your account if you don't know what you're doing.
Well,
you are absolutely correct.
correct.
I mean, the key with trading and investing is having a risk management plan. You in any investment, you should know what your risk is and what your reward is before you even get in that trade. So you are correct if you don't know what they're doing. That's the great thing about having an actual plan. We've been talking about in the first and second segment, having a strict plan, risk management rules within that, so that way you protect yourself.
Right. Understand what the risk is, know that, and then learn how to manage it. And that's the number one thing that we teach our students because it is the most important thing. What's really important is the reward potential with a lower risk involvement. And unless you're willing to assume some risk, you really shouldn't be in any of the financial markets. So the way to be able to manage risk is to understand, again, how price moves, what causes it to move.
Yeah. So we might get into weather here. So
Okay.
That's a good question, though. I appreciate the question there, Tibor. Looks like we have, what is a good risk percent of your account size to risk on each trade? Well, Wes, everybody's going to be a little bit different, but you want to keep that as small as possible. I mean, some people like 0.5%. Some people like 1%.
Yep.
2, if you want to be more aggressive. So that's really up to you, but that's why having a plan and strict rules within that.
And
to
that
keep
changes
10
as you
seconds.
become more consistent in your successes.
Weather. Thanks, Wes. Thanks, Denny, and welcome back to Investing with Confidence. I am your host, Joshua David, having a great time talking about using the market for income potential. Al was shedding some light on how to use the other assets. We have the stock market, we have the futures market, the Forex market. The best part of those, they're open 24 hours a day. They have leverage. We had some questions on the break about how to manage any capital you have. Do that with low risk, high reward, high probability entry points in the market, and that's usually at or near a turn in price.
Right.
If you happen to miss 2 tickets for the investing class, call 952-814-4410. You can also text the word invest to the number 484848. And Al, you wanted to talk a little bit about retirement accounts. Why retirement recommendations people are being put in, they're not typically the best for them. There's not a one size fit all. And you talked about that in the last segment. And so many people are falling short of their retirement goals. Why is that? But how can we eliminate that? What can we do so we potentially don't fall short at those retirement, the golden years of our life?
Yeah, well, unfortunately, a lot of people have just become complacent about their retirement accounts because they think they have this great retirement savings strategy called a 401k or 403b, where all you have to do is just enroll for it, let some money be taken out of your paycheck every time you get paid, goes into the market. When you retire, you're going to have a ton of money there to rely on. What happens if you retire and that money isn't there? Can you call the plan sponsor and say, "Hey, you need to make up some money here because I don't have enough"? That is not going to happen. And the truth is that almost 50% of the people that have an employer-sponsored retirement plan do not know what their money is invested in. And here is maybe the biggest asset that they have, the most important asset they have, and they have no idea what it's in or why it might be where it is. And here's, the good news, Josh, is that we are all living longer than people maybe a couple of generations ago.
What's the bad news?
Bad news is it's not free.
So what can we do?
Yeah, it is not free to be alive. There are costs that you always have.
What can we do then?
Number one, understand what is in your retirement plans, whether it's an employer-sponsored plan or one that you are managing yourself. Understand what the opportunities are there. Even in a 401k, there are some investments that will do better than other. And it's identifying what those are. The way you do that is the same way you use our core strategy with stock or with futures or Forex or options. You first identify where the buyers are and where the sellers are for a particular index or asset or sector, and then you make your changes based on that. Maybe there's some things that have lower fees, because one of the biggest disadvantages in these retirement accounts, and one of the primary reasons, if not the primary reason, that you don't have as much as you think you should have, is because fees are taken out on a regular basis. And even fees that you think are reasonable, and most people don't know what those fees are, will never know what the total fees are. Some people don't even know there are fees, but it's like a hole in the bottom of your retirement bucket, and with a vacuum cleaner attached to it, sucking money out on a daily basis. A 2% fee over the course of maybe a 30 or 40-year working career could cost you 40 to 60% of what you could have when you retire. That's a huge amount of money that could make a huge difference in in your living, your lifestyle, your standard of living when you retire. So it's the investments that you're in. There is a way of investing your retirement money where you can have access to assets that use that leverage. There you have access to assets that can provide protection. So if the portfolio goes down in value, there is an asset there that will go up in value to counter that. What about markets that go down? What about a bear market or a major correction? What happens in your 401k or 403b? It goes down. There are assets that you can use in a self-directed retirement account that will actually go up, have the potential to go up if the market goes down. And the same thing when the market's sideways. So the market goes three ways. 401ks, 403bs allow you to only participate or have the potential to participate in one out of three ways. You can have a retirement plan set where you have 3 out of 3 ways of participating. That's a huge increase in the odds that are there for you.
Yeah, think of your 401k or IRA that somebody else is managing. Think of it as a car and only having drive. You need to have reverse in your car as well. You need to do the same thing.
Yeah, you can't even get out of the driveway if you don't have reverse.
You're right, unless you have a garage, two doors, right. But most people don't
have
that.
Well, you may make one.
You're right. But you have to have proper plan or proper investing strategy for up and down markets. And the crazy thing, Al, is we talk to a lot of people here at Online Trading Academy, and people still are not reaching their retirement goals, even though the market's up. We kicked the show off. Markets are at all-time highs. People's accounts, they're not doing the same. They're lagging, or they're a little slower with that, and they don't know why. So they're understanding, okay, hey, what can I do differently? What can I change in my retirement account? Maybe can I do that myself? And Al, you teach investing classes to introduce people to different techniques and concepts with 401ks, IRAs, especially if they're retired. A lot of people are starving for income during retirement. They want that income potentially using the markets. So callers 1 through 10, I want to invite you to this class. In these classes, Al talks about how to manage risk, navigate these volatile markets, some of the common mistakes that novice investors make, but how to minimize them, but also how to buy at wholesale prices and sell at retail prices, just like the institutions do in retirement accounts. So callers 1 through 10, you're going to receive 2 tickets plus the retirement planner. 952-814-4410. That's 952-814-4410. You can also text the word invest to the number 484848. So, Al, in trading and investing, we are looking for footprints on a price chart where the institutions are moving millions and potentially billions of dollars, but how to trade like them and not against them. But we also want to use the leverage in our retirement accounts because if you think about it, if you're in a 401k or IRA right now, you are probably 100% invested in the market, which is 100% at risk. How do you use the leverage, especially with options, to use pieces or chunks of that capital, keeping some protected? You mentioned protecting your portfolios
Right.
and still having that income potential during retirement.
Well, there's 3 important things to consider when you retire. Protection is the number one thing. You don't want what you've worked 30 or 40 years to go to somebody else. And basically, that's what happens. Trading and investing, it's just a transfer of assets from the accounts of people that don't know what they're doing into the accounts of people that know what they're doing. That's why it's so important to have the proper education based on the fundamentals, the factual fundamentals of how the market functions. But what you want to make sure is that if you want to also have a replacement for what happens or what you got with your job, because when you were working, you had a paycheck coming in that was able to maybe cover most, if not all, of the bills and maybe have a little extra left over. When you retire, that money is gone, that income is gone. What we think is important, maybe the most important thing besides protecting your assets, is just generating some cash off of what you have. Instead of drawing down that account and maybe having it disappear before you do, why not just keep building the account up, but then generating some cash off of it? That requires the proper education. One of the things that you can use are the leveraged assets that we talk about. Again, I know a lot of you haven't been exposed to futures or Forex or options. Or
Which is a
heard,
great thing.
Yeah, well, or you've heard bad things about them because Wall Street isn't putting you in those things. They're really not advising you to do that because that's not the best thing financially for them to have their clients in. But if you are in a situation where you want to have some additional cash, if maybe you're a little bit behind on where you thought you would be, then those leveraged assets are a great way to do it. You can even people
have
that
that
have
potential.
Yeah, but it's always the potential. There's no guarantee. The only thing that's guaranteed is if you don't know anything, you probably are not going to do well. But the leveraged assets give you the opportunity to have a smaller amount of money. It lets people with smaller accounts participate, but also people with large accounts that are a little reluctant to put money in the markets. You can do that with a smaller amount of money. But the sad thing is that it's the amount of illiteracy by older adults in this country that causes this kind of retirement crisis we have. The American College of Financial Services did a survey. They found only 26% of older Americans are retirement literate. That's pretty sad. And of those people, they found only 13% are more likely to take reasonable market risks when investing in the market. So, in other words, what they're doing is they're maybe going into something that is very conservative, very safe, which really, in most cases, isn't even keeping up with inflation. You know, if you're in some kind of a fixed income, maybe a treasury, T-bills that are paying less than inflation, you're actually losing money. And what happens is that people then they're taking more risk than they should without knowing what to do, or they're just not taking any risk at all. And to have any kind of reward, that risk has to be part of it, but we show you how to manage the risk. You should never go into a trade and have it result in a big loss. That should never happen. And we show you how to do that to make sure it doesn't happen, increase the reward potential, reduce the risk, and increase the odds that the trade is going to work in your favor. Those are the 3 things that are important.
Yeah, and the fact of the matter too, Al, is there's a lot of people here in Minnesota that are short on reaching their retirement goals. They just don't have enough, or they feel like they're not going to have enough, so they may have enough to just get by.
Correct.
There's a gap of what they have. And if you think about it, if your income stops right now, say you're in your 40s, 50s, or 60s, and you're still working, and your income stops right now, right? That could be catastrophic for a lot of people, right? That's what happens during retirement. So it's important or imperative, I should say, to learn techniques and strategies now to have income potential now, but continuing that income potential during retirement years because your income has stopped.
Yeah.
Not drawing down any retirement you have. If you don't have enough, hopefully you have that potential with these markets. That's what the goal with those is to do.
Yeah.
So you teach different techniques and different strategies in these investing classes for people to see what is that potential. How do I potentially create income during my retirement years, but also during working years? So callers 1 through 10, we have investing classes right here in Bloomington. Al teaches these. They're free. They're only 2 hours. So callers 1 through 10, you're going to receive 2 tickets. You're also going to receive the retirement planner. Mention that when you call in. That will help you get started right away. 952-814-4410. That's 952-814-4410. You can also text the word invest to 484848. Al, what's up next?
Well, we need to continue talking about retirement. We have stuff from the first and the second section that we haven't even gone over. But let's talk a little bit more about retirement and how people can make sure that they don't become one of those statistics.
Yeah, hopefully reaching those golden years with confidence. 952-814-4410. We will be right back.
Okay.
Finally. Thirty seconds. Shane Company. Welcome back to the final segment of Investing with Confidence. I am your host, Joshua David. We are having a great 4th of July weekend. Al, you ready for some fireworks this weekend?
You know, I am actually. Fortunately for me, I don't have to go anywhere. I can just sit on my deck and watch the fireworks from there, really close to where
I know we were
Bloomington
talking
shoots
about,
theirs
and I will actually be there as well.
Good.
So,
And-
Al, you wanted to get into more retirement, and we had people, calling on the last segment about how to understand more techniques and strategies. So I want to make sure I give away one more set of tickets for callers 1 through 10, 952-814-4410. Also text the word invest to the number 484848 for 2 tickets for the investing class. So Al, with retirement being that topic that you want to cover again, I mean, we that's a huge topic for people. I mean, a lot of people are searching for those retirement years and trying to work towards that all their life. It's what they save. I mean, that's the life savings people have. And people just are not doing that with confidence. They don't have enough to retire. So they're kind of looking at the markets to have more potential getting there, getting to the promised land. So what do you do here at Online Trading Academy to help them get there with more consistency and confidence?
Well, we have some pretty good sized classes that come in here. These 2-hour classes you've been talking about, we'll have numerous people in those classes, but we don't really know anything about you. When we know you're really nice people when you're sitting there, but not enough about you to be able to make any kind of suggestions to you. So what we do, the first thing we do, if you want to, come to the academy, is to find out more about you. What are your expectations? What are your goals? What are your fears? Where are you now? Where do you want to be? What's the end point for you, which has to be identified before any kind of recommendations can be made, before the right assets can be identified to help you get from where you are now to where you want to be. So we take this very personally. We put something together that is specific to each individual. As I mentioned earlier, one size does not fit all. And that's really what Wall Street is doing. They're putting pretty much everybody in a one-size-fits-all strategy and handing off really the management of your money to somebody else, to a mutual fund manager, for example, who never meets you, knows nothing about you. But again, you have the opportunity to get more involved in the management of your money, because the bottom line is that you are the one that's responsible for where you end up. You cannot call a broker. You cannot call a 401k manager and say, I'm not happy with where I am now based on the investments that you put me in. Make up the difference. They're not going to do that. You're responsible for where you are, so you need to make the right choices. Now is the right time to do that. The earlier you can start, the greater the possibility that you're going to have a much higher standard of living in retirement. It's simply that power of compounding. The education is there. A lot of people, well, if you're 19 or 20 years old and you've got a couple $100 to invest, maybe you can go out and get a copy of How to Invest for Dummies. And maybe for a couple $100, that's not so bad. When you're in retirement, maybe you have millions of dollars. Is the same advice that the Investing for Dummies gave you, is that going to be appropriate for $1 million investment?
Probably not.
No. And the important thing is to make sure, if you have $1 million investment, if you have $1 million retirement portfolio, that it stays at least at $1 million and not less.
And now, a wise man once told me, that came long before me, said, if you invest for dummies, you are the dummy.
It was very appropriate. Whoever that wise man was, he knew what he was talking about. Yeah, but think about this. If in the year 2007, we started entering into a big downturn in the market. The S&P was down 57% until about March of 2009. If you had $1 million investment in 2007, your retirement account, say, is $1 million, or just your investment portfolio, in the next 17 months, that $1 million went down to $437,000. That's a big drop. That's more than half of what you had. Is that going to have an impact on how you live? So, number one, you never want to have that happen. Protection is huge. But then also understand what the right assets are and the right strategies appropriate for you, individually, for you to give you the opportunity to get to where you want to go down the road or where you want to be now.
I'm glad you brought that up, Al, because, we have a lot of listeners that do have potentially, $500,000, $1 million in their retirement accounts. And they want to protect that. They don't want to lose that in a market crash. They know there's one coming. And sometimes people put their head in the sand and do nothing just because they just don't know. That's not new. It's just different. And you help people become more consistent and have more confidence doing, and taking more control of their retirement accounts, protecting what they have. If you have retirement accounts that you want to protect, Al teaches investing classes. I want to invite you to, when you call in right now for this free investing class, mention the retirement planner. If you have retirement accounts, that will actually help you get started right away. So call 952-814-4410 for 2 tickets plus the retirement planner. You can also text the word invest to the number 484848. And now we've covered a lot of topics, and I know topics we haven't even got into. And we have new investors in the market. I mean, they're entering the markets at record pace. We also have a lot of listeners that have 401ks, IRAs, maybe with their company sponsor, their work, or with an advisor. and they want to take more control of that.
Right.
How do you take more control of your retirement account? It's self-directing, but what's the concept and how do you do that?
Yeah, you're already self-directing. You're already making the decisions in your 401ks or 403bs. Why not do that in a way where you have more choices, you have the ability to protect yourself, and you also have the ability to participate if the market's going down or sideways? That's setting up a self-directed IRA or an individual investment portfolio. When you retire, when you leave a company for whatever reason, you can roll that 401k into a self-directed IRA. That's what a majority of our students do. Also, if you're still participating, the best thing about a 401k is the free money. If you have a match, if a company's matching a portion of what you put in, that's free money. You want to take advantage of that. But the emphasis, the guidance is still put as much money as you can into that 401k. Keep putting it in. Well, you're putting it into something that has high fees that reduce the rate of return for you. You're putting it into something that has mediocre returns, especially if it's a mutual fund. 90-some% of mutual funds underperform what they're supposed to perform with over time. A self-directed IRA gives you the opportunity to invest in the leverage assets we talked about, individual stocks. If you have to invest in mutual funds, if that's the only way you want to be in the market, you can do that in a self-directed IRA, but we'll show you ways of doing better than that. You can participate if the market's going down, and it will. When it does, we'll have another bear market. It's just part of what this market does. We'll have numerous corrections. That's a 10% drawdown or more. A bear market is 20% or more. We will have those. And if you let your money, if you let your portfolio go down in value during those time periods, it has to work hard just to get back to where it was before any profit potential exists for you.
I like that. Now, as I mentioned, we have a lot of brand new listeners that are brand new to the markets and are looking to learn more techniques and strategies to get into these markets, but get more consistent with their trades and investments. Also, they have 401ks, IRAs, TSPs, 403bs. They're all consider it all like a 401k. They work the same way, and they want to be a better steward of their money. We also have a lot of long-time investors. I mean, we talk to people that have been investing for many, many years, but just want to sharpen their skills. They want to learn more techniques and strategy. And the fact of the matter is, Al, these are great markets right now. Now is probably the best time to be in the market.
You don't want to miss this market.
But you have to have the consistency and confidence to do that, and you help people with that consistency. Now is the time to get the right tools. So one last set of tickets for this investing class that we do right here in Bloomington. We are located next to the Mall of America, in between there and the airport. And these are free classes. They're only 2 hours to start gaining more consistency in your investments, but really to be the best steward of your money. So callers 1 through 10, when you call in right now, you're going to receive 2 tickets. You're also going to receive the Financial Quick Start Kit, which will help you get started right away. In these classes, Al teaches these. He talks about some of the common mistakes that novice investors make, but how to minimize them, how to time the market. We've been talking a lot about that this whole show, by letting price come to you, but most importantly, our step-by-step, rules-based strategy for trading any asset in any market, and that's stocks, options, futures, Forex, or even cryptocurrency. Callers 1 through 10, one for you and one for a friend. The number is 952-814-4410. That's 952-814-4410. Al, holiday weekend, firework week in the market. Let's hear some firework words of wisdom.
Well, one thing that we hear too often, Josh, when people come into these classes is, you know what, this isn't the right time. I just don't have enough time right now. Look, every day that goes by and every dollar you don't make could end up costing you thousands or tens of thousands of dollars per dollar down the road due to the lost power of compounding. And we see every day, in addition to some people saying we don't have enough time, people saying, I wish I'd done this before. I wish I'd done this earlier. You can't know when a bear market or correction is going to start, but you can take advantage of the possibility of a continuation of this upward market, at the same time be protected and prepared, knowing that when it does go down, you're prepared to take advantage of that. This is the right time.
Now is that time. Don't look back wishing you would have done something different. Once again, one last set of tickets for the free investing class right here in Bloomington, 952-814-4410, or text the word invest to the number 484848. As always, happy 4th of July. Same time, same place next week. Until then, retire young, my friends.